All right, welcome back. We've got a huge update for you this week. We're not just making a few tweaks to the portfolio. Oh no, we are fundamentally rebuilding it to create what I'm calling the AI Fortress. It's a massive strategic pivot, and frankly, it all starts with a move that's probably going to shock a few of you.
And there it is, right off the bat. The biggest news is that we have sold our entire position in Microsoft. Yeah, I know. A cornerstone of so many AI portfolios, and it's gone. We did this for a very specific reason: to free up a ton of capital so we could double down on what we think is a much more direct, high-growth opportunity.
So let's get into the nitty-gritty. I want to walk you through exactly how this all went down and look at the specific trades we made to make this new strategy a reality.
Okay, so it was basically a three-step move. First, and most importantly, selling all of our Microsoft shares gave us the cash we needed. Second, we trimmed just 5 shares of Amazon. Now that was more of a tactical move, really, just to get our holding to a nice, clean 100 shares, which is way better for running options plays. And finally, every penny of that capital got redeployed into buying 100 new shares of ServiceNow, effectively doubling our position.
And look, all of these moves, every single trade, was done for one reason and one reason only: to construct this new AI fortress, a super concentrated collection of the 6 companies that we believe are the absolute pillars of the entire AI revolution.
So here it is. This is what the portfolio looks like now. You can see the changes right away, can't you? Microsoft is gone, wiped to zero, and that ServiceNow position has just ballooned. The total value is sitting just under $230,000, but the most important change here isn't one single line. It's the whole new concentrated structure.
And this number right here, this is what it's all about. Almost 60% of the entire portfolio is now locked up inside that AI fortress. This is a huge, high-conviction bet. We're moving away from broad diversification and towards focused firepower.
And here's the new philosophy in a single picture. It's a classic barbell strategy, right? You've got 2 pillars. On one side, you have the AI fortress, making up nearly 60%, built for what we see as foundational growth. And on the other side, a more aggressive 41% crypto allocation, which is there to hunt for that high beta, explosive kind of upside.
So, what's actually in this fortress? It's time to open the gates and take a look at the 6 core holdings. And for each one, we're going to break down both the bull case and, just as importantly, the bear case.
Let's kick things off with the absolute titan of data, the parent company of Google, Alphabet. It is the single largest holding we have in the fortress, and there's a really good reason for that.
Now, the thing about Google is this: the bull case is just so powerful, right? Their data is the ultimate competitive advantage, and you just know they're going to figure out how to monetize their Gemini AI across everything they do. Plus, you've got these incredible hidden gems like Waymo. But, and this is a big but, the bear case is terrifyingly simple. What if AI chatbots completely disrupt traditional search? That hits them right in their moneymaker, and that's not even mentioning the constant regulatory headaches they face around the world.
Okay, our second heavyweight champion in the fortress is the #1 challenger in the chip space: AMD. This is our direct bet on the hardware that's building the AI revolution.
The bull case for AMD is just dead simple. The world is absolutely desperate for a second source of AI chips that isn't NVIDIA. AMD is the one. They are perfectly positioned to grab a huge chunk of that market. The bear case, though, it all comes down to one word: CUDA. That's NVIDIA's software platform, and it creates this incredibly deep, sticky ecosystem that developers are locked into. It's a massive competitive moat that might just keep AMD in the #2 spot forever.
The third pillar holding up our fortress is, of course, the cloud and e-commerce behemoth Amazon. This is really a foundational bet on the actual infrastructure that powers AI.
So for the bulls, it's all about AWS being the literal bedrock of the AI revolution. All that computing has to happen somewhere, and for most, that's AWS. On top of that, their super high-margin advertising business is just exploding. The bears, though, they'll point out that AWS is slowly but surely losing market share to Microsoft's Azure and Google Cloud, while the retail side of the business is getting squeezed by these new low-cost competitors.
All right, moving on to the undisputed king of social media, Meta. This is our play on how AI is being directly applied and monetized in the apps you and I use every single day.
You know, the bull case for Meta right now is just unbelievably strong. Their AI is turbocharging their ad targeting and their content feeds, and that translates directly into huge revenue growth.
But the bear case is always looming in the background. The business is still almost entirely dependent on advertising, which goes up and down with the economy, and Wall Street is still really skeptical about the billions and billions of dollars being poured into the metaverse.
And here it is. This is the company that started this whole portfolio shakeup, the enterprise software giant ServiceNow.
So the whole reason we doubled down is this bull case right here. ServiceNow software is incredibly sticky. Once a company uses it, it's almost impossible to switch. And that gives them a perfect runway to just sell their existing customers new premium AI tools. The risk? It's the price. The stock is expensive. It trades at a really high valuation, which means there is zero room for error. If they don't hit their growth targets, it could get painful.
And that brings us to the sixth and final member of our AI fortress. I like to call this one the unsung hero of the hardware boom, Broadcom.
Broadcom is such an interesting company. You know, everyone is obsessed with GPUs, but Broadcom basically makes all the essential networking gear that connects those GPUs together. Plus, they design custom AI chips for giants like Google. The bear case is really the flip side of that strength. They have extreme customer concentration. If a huge customer like Apple or Google even sneezes, Broadcom catches a cold.
So, after going through all 6 of these companies, what's the big takeaway? Well, it's a huge move toward a very specific, high-conviction philosophy that's best described as a barbell strategy.
And this slide really just sums it all up, doesn't it? It is a classic barbell. On one end of the bar, you've got the foundational growth of these 6 AI giants in the fortress, and on the complete other end, you have the high-risk, high-reward, wild ride of the crypto space. The whole point is to balance that relative stability with the potential for explosive gains.
Which of course leaves us with the ultimate question we have to ask ourselves. By concentrating so heavily into just 6 stocks and one very volatile asset class, is this portfolio a masterstroke positioned for incredible returns? Or have we just taken on a massive, unmanageable amount of risk?
We are going to be tracking the performance of this new strategy very closely in the coming weeks and months. I'd love to know what you think down in the comments. And of course, make sure you like and subscribe so you can follow along with us. We'll see you in the next one.